So I got a few of y'all's papers, but I'll put y'all on the spot. So one, you have yours, paper two, yeah. I can remember a few of y'all email me, so I'm gonna put y'all on the spot here. Oliver, Jake, huh? You're gonna do title, all right. Cassandra's doing that too, right? Yeah, I think that's a good topic. Make sure have some discussion of what it would look like in the insurance industry, because I don't really think you can say it's part of the insurance industry. So what would it look like? You know, there's a lot of debate. In Cassandra, I don't know if you went to Iowa's state insurance page, if they would have a whole section on title insurance. They might have quite a bit there. Yeah, that it's an interesting topic. Anyone else interested in the title insurance? All right, Jacob, do you have yours? I'm not sure. David?
I was gonna do effective autonomous calls on the insurance.
Okay. Yeah, make sure it's, so you can certainly talk about autonomous cars, just the technology, where it is. You'll usually see, I think it's 3 areas of autonomy. And it's different 3 areas because each one, we may not get to that very last part, but all 3 of them are gonna have an impact on insurance problems. Probably. Anybody else doing the AV? Okay. Anybody else? Brandon?
I'll do that, sir.
Right. Yeah, so make sure it's not just on AVs. You got to bring in the insurance industry, positives and negatives. One angle on that is interesting are what insurance companies are saying in their annual reports about it. Some of them are actually listing it as a risk, so it can be interesting. Okay, Matthew, I think you sent me something, but I can't remember. Telematics, yeah, I think that's great. Now I'm not sure what comes up on telematics. So what you're looking for is a good meaty article. It doesn't have to be an article if you can find a documentary. So it can be a good solid documentary would be good as well. So a lot of these look like they're targeted at the retail market. You want to get more into from the insurance industry standpoint. Try to get it as more technical and instead of less technical. They do look like they have a lot of videos of telematics and insurance. So don't forget about YouTube. In fact, YouTube is becoming more of my first place to go instead of Google. I know YouTube is on my Google, but it's amazed me how many people do videos these days, and a lot of them are really quite excellent. They're speakers at conferences, and you may find some really, really good topics. The other thing I would do on telematics is go to Root Insurance. And I don't know if Matthew, you looked at their site yet, but Root is a very unique company. I don't want to do all that. I want to find their actual website. I don't want to quote. I want company. Root is a technology company. That's interesting. Not an insurance company. That revolutionizing personal insurance with a pricing model based on fairness and a modern customer experience. Through data and technology, we base rates primarily on how people actually drive. So here's an insurance company that's entirely based on AI and telematics, the entire company. So Matthew, here's, when I was y'all's age, scared to death, for some reason I had the guts to email or call people, hey, I'm working on this paper and I've never had a bad experience. So not to put any pressure on you, but you might find that, and oh, the other thing I would say, oh, I have to find it. There's a podcast. Oh, I don't know if I can find it fast enough. It is a really, really good podcast. There's actually an insurance industry podcast. Can you believe it? Sounds really boring, but they're actually quite interesting. Some of them get really technical. I just don't know if I can find it. Yeah, it's called Not Unreasonable. David Wright. Podcast. See if I can find it. The Unknown. So here he is. And then he actually had an interview of Root on his website. I don't know if that's the best way to find it, but I mean, look at this podcast. If you're looking for a topic, pricing insurance risks and insurance overhaul, just really, really cool stuff. But there was an entire episode on Root, but I don't know if I can find it. It was very, very, very interesting. I don't see a site where you can search the Not Unreasonable podcast Root. Let me try that. Yeah, I'm not seeing it, but anyway, it's so that's a good. I'm glad you're doing that one, Matthew. I've forgotten all about the Not Unreasonable. They get some pretty quantitative discussions going. There's a lot of statistics. They interview a lot of actuaries. So if you're an actuary major, you might find it particularly interested. He's a former actuary and chief insurance officer at an insurance company. So yeah, there's a good site there. All right. Elizabeth, I know you're looking. Did you decide on something?
I think we can do the profit prevention.
Okay. Yeah, and what I'd recommend you do, you can certainly look and see what technology is done, but also look at how the insurance industry has actually changed how cars are made. They have quite a bit of influence there, so it's quite a bit you can do there. Right. Nicholas, you thought, huh?
Cat bonds.
Oh, cat bonds. All right, that'd be interesting. You thinking the history of them or just how they work? Okay. I think you should be able to find stuff out there, but boy. So you got to do more than just say what they are, but try to find, yeah, a lot of stuff comes up, market pricing, risk, cat bonds and Irma would be interesting. Yeah, you might do a little research to see what topics you're going to cover under that. But yeah, I think we saw just what in class, some of those things I clicked on look pretty interesting, just pure luck. So there's definitely going to be some stuff out there. That's a good topic to do, if you're interviewing in a finance job, because interviews love hearing about some unusual asset class out there that that normal undergraduate students wouldn't know anything about. So, right, Humberto.
Yeah, I'm leaning towards title insurance.
Okay. Okay, Catherine, have you thought something yet? Telematics, all right. Joshua or Hugo? All right. Joshua, you thought of one yet?
I was thinking about climate change.
Okay. That one, definitely that's one where if you go to Swiss Re, Swiss Re is very good on their risk knowledge, mitigating climate risk. So they're pretty good writers. They take a very scientific approach. So you get some good meaty articles. So you could almost do your entire paper just looking at them. You know, there's probably some topics that are a little too specialized, but you want to make it as much insurance related as possible. Yeah, I'm sure you will. If you could find something just on their site. All right. Nicholas, have you thought of one yet? Oh, that's right. I think you sent me something. Yeah, there's a lot you can do that. And insurance. One angle I think is interesting here is we now have a few years with some new laws in place. And are they actually showing any effectiveness? At San Antonio is hands-free only, right? Now, how do the police know you're hands-free? If it's sitting in your lap, is that hands-free? Can you even do hands-free with your GPS? I remember my GPS told me slight left, and it was to go around the turnaround for the freeway. I thought, well, that's not a slight left, that's a U-turn. Why didn't it say U-turn? So I'm having to stop. It's the only time my telematics said that I used my phone. It's because, yeah, I mean, it's telling me slight left and I'm at a light. It doesn't make, so I had to pick up the phone to see where I was. So I was distracted. Yeah, it's a good topic. It's phones, it's the radio, it's one thing, and I don't know if it was Tesla, that our cars just have too much stuff in the front, too many distractions, you know, just that whole distraction itself.
Didn't they say too, like, you can't have more than 5 people in the car?
Oh, I've never heard that before.
Yeah, that's something I heard, something like that.
5 would seem, even with kids, I don't know. I've never heard that before. Certainly with teenage drivers, that's an issue. Jamari, you sent me yours, but I can't remember. Telematics, right? And Gilbert, cyber. Yeah, cyber insurance was big in the news a little while ago. I think you can. You're looking for articles. You're not looking for advertisements and companies. Sometimes, if you can find the biggest company doing this, a lot of times it depends on the company. Like if you go to USAA, you're not going to find good research. That's just not their thing. But a lot of times, if it's B2B, business to business type of businesses, they will have good, like Swiss Re. Swiss Re is business to business. They will have really good meaty articles on their website because they're trying to collect customers. So I don't know who does cyber. Nation, really? Yeah, I used to think of Nation as being a personal lines. They have Berkshire Hathaway there. But Nationwide's a big company. The 5 best cyber insecurity. I don't know who's making that decision. Top 5 cyber insurance companies. AXA. I don't think AXA is a US company. Chubb, you would think of Chubb. I've never heard of his costs. I've never heard AIG. AIG is an interesting company because I remember 2008, they're going out of business. And people are asking, you know, what are you going to do now? Your insurer's going out of business. It's like, well, they're the only ones that sell this particular insurance. So I'm sticking with it. I have no choice. So AIG does a lot of that very specialized. Gerardo, have you picked yours?
I'll do car safety, but I'll fall for like fast pedestrian.
Well,
Because I'll use the II like website.
yeah. Yeah, let's just call it, well, car tech and safety. I mean, they've got so much, their articles tend to be kind of shorter, but if you combine several of them together, you certainly can. It would be interesting to see how the car has changed. We went years where people were just dying left and right in car crashes. And then I remember the guy's name, and then I forgot it again, Ralph Nader. So Ralph Nader was the big, have y'all heard of Ralph Nader? So Al Gore would have been president if it hadn't been for Ralph Nader. He got enough votes in Florida to and he didn't get any votes from George W. Bush. All of his votes were Al Gore votes, but so he wasn't real popular there for the Democratic Party. But he was a big proponent of safety belts, and almost heralded even the history of that safety belts. I don't know when airbags came in, a lot of talk about the crash zone. If you're going to do all those, you can almost look at a history. What I would find interesting would be the impact each of those has had, which has been most impactful. Roundabouts, I know, so you don't have to limit yourself just to car technology. It can be technology outside of the car. So roundabouts is a good example. Uh-huh.
I heard they were like trying to make it where if you buy a firearm, you're gonna have to get insurance now for that. They were talking
For
about
homeowners insurance, you're talking, or specific
safety
for fire?
insurance for those, like,
Is that a state level at some state, or?
I just remember hearing them talking about it. If you buy a firearm, they want to make it mandatory that you have insurance.
Yeah, I haven't heard. I don't.
I guess you kind of talk about like what ifs during.
Yeah, that's the. There probably wouldn't be enough to write about that yet, but would be an interesting. All right, Cody, did you pick one yet?
Those can do a commercial insurance,
What specifically?
like general liability and property.
Okay.
Or, um,
All right, so just think what angle you're going to take on that.
the big one.
Well, you probably want to pick between general liability and workers' comp, but current issues facing workers' comp. We'll talk some of them, some of the obvious ones in class here. 20 workers' comp issues to watch. So something like that would certainly be interesting. Yeah, I mean, you're seeing some pretty obvious ones. Vaccine mandates, ESG, I don't know, workers' comp. Boy, that's interesting. I think this is kind of generic for workers' comp companies. COVID-19 certainly is an issue. Independent contractors, this has been a huge issue for Uber and Lyft. That can certainly, so there's certainly workers' comp. There's always some issue on workers' comp. That's a major one. The biggest one around is work from home. That's kind of having more impact than anything else. But there's some big ones. We're going to talk about the integration, return to office, obviously, communicable disease and workers' comp. That's kind of an interesting one. Yeah. So Gilbert, I don't know if you're going to include ransomware in yours. My church got hit by ransomware, and they didn't ask for any ransom. They just hit us. And it was pretty frustrating. Huh?
But it says how in the insurance you have to, like, you'll be covered by security breach. There is some legislation that's being passed where they have to be notified whenever you kind of like have anything online, that company has to notify.
Yeah. Yeah, I mean, you can go back to the Target one was a huge one. That was a few years ago. I think we've had a couple others since there. I think even the federal government has had some. So the question is what exactly is covered? Because like with ransomware, for us, there wasn't really a loss other than just massive amount of time to rebuild stuff from scratch. I'm now doing financial statements again. I haven't done accounting because our bookkeeper isn't really comfortable how to do a financial statement from a bank statement. So it was very time consuming and costly, but how much insurance actually covers that? Yeah, that's a little too generic, but rate adequacy, aging is a workers' comp issue. So Cody, the workforce is going to get older, and so kind of sounds bad to talk about old people walking around. They're going to have special issues, but it is going to be an issue that companies have to deal with. The gig economy, obviously. So I think workers' comp by itself could be interesting. The gig economy, none of you are doing that. If you're trying to find a topic, the gig economy can definitely be a topic. Now, unfortunately, this company, Buckle Insurance, they started to cover the gig economy. Really fascinating company. Their CEO was the CEO of the USA Life Insurance Company and USA CFO. And then she's CEO of Buckle. And they've hired a few of our students, and then they went out of business. So I don't think they're in business anymore. I think their website's still operating. Rideshare insurance. So their website's still there. So they could be pretty fascinating, but that, you think about Airbnb, Lyft, Uber, and some other place, this shared economy. What does that mean for insurance? If any of y'all have friends doing Uber or Lyft or doing Airbnb and you want to give them some great insights, what does the industry say about this? What should you buy? That by itself could be a pretty hefty topic. In fact, Cody, Airbnb and Uber for workers' comp. What happens when a driver gets injured? Does Uber have any workers' comp, or is that a true contract? And I think they mentioned contract versus gig. So the gig economy can certainly be a workers' comp issue. Or the gig economy could be an entire topic all into itself. I think it would be pretty fascinating topic. Do any of y'all do Uber or Lyft? I usually have at least one driver somewhere in my class. They're scared I'm going to ask them if they bought insurance. All right. So some pretty good topics there. So hopefully we'll get everybody. So
Excuse me.
email me when you have your topic.
Professor.
Uh-huh.
This is Enrique.
Oh.
I'm in the Zoom meeting. I'd like to also do telematics as well.
Okay.
Thank you, sir.
Sure. You haven't looked at my telematics in a while. You look at it every 3 seconds when you first start off, and then after a while you get tired of looking at it. It's frustrating because it thinks I'm driving every time I'm riding my bike, and I ride a bike every day. So it has a bunch of these 1 mile trips because I ride so slowly at times. I go off the radar. But yeah, I have trips at 123, 147, all over the place. You can uncheck it, which is interesting to me because, I could say that wasn't me. And then, what do you do? Just go and find every time you got caught doing something. So I got one hands-free call. So the time where the GPS messed up, that was during my trial period. So I was okay there. I had one hands-free call, which I actually did. I had a conference call. I just put the call on, listened to it. If I needed to do something, I stopped and picked up the phone. It actually caught me doing that. So I guess, but I don't know how much that hurts me. My score is 93. I have no idea what that means. My policy discount has been continuously 30%. And I don't know what that means. Is that 30% on part A, on part D, on A and D? So I don't know what that means. I guess I'll find out next time it comes around. So it is an interesting topic. You have to do your own independent work, but if you find a great article and want to pass it on to the other person doing this, you're free to do that, but do your own independent work. So feel free to. All right. So talking workers' comp. So again, I've never worked at a firm that sold workers' comp. I've dealt with a lot of firms that have to buy it, so I have some of that familiarity. And you can be dealing with a pretty small entity. I helped a small school. I don't think they had much more than 15 employees. And we had a couple of pretty serious workers' comp claims during that time. And it certainly has an impact. When you have 15 employees, you have a major claim, it's definitely noticeable to the insurance company, and it definitely can in fact impact your client, your premiums. My own real experience is I used to do a presentation when I was at USAA. We just went around the country, and this one lady was always on the same panel with me, and she was the workers' comp person. I was the DFA person, and so I got to talk to her quite a bit. She worked in a state that had a state pool, so it was a very different perspective than me working for a private company. So I don't have the inside scoop on workers' comp, but have dealt with it over my life. Each state has their own thing. These are state mandated insurance policies. Each state regulates their own, but that's really, really interesting from the standpoint that employee benefits is regulated by the federal government, by ERISA, but workers' comp is regulated by the states. And those two groups, there's a lot of overlap. OSHA is the federal government. Workers' comp is the state. Those two groups don't always merge and coordinate with each other. So there are a lot of issues. So yeah, Cody, there's a lot of issues you can bring up. I mean, I bet even if I have no idea, but OSHA and workers' comp, I think stuff would come up. What role does OSHA play in workers' comp claims? I mean, that kind of stuff would just come up. So why do we have workers' comp, and why is it structured like it is? Because it's very different than other insurance. So we went from a predominant agriculturally focused economy to an industrial one. Some people might say, well, we went from a safe environment to a dangerous, but we actually went from a very dangerous, uninsured environment to a dangerous environment that finally got insured. The farm is a pretty dangerous place to work, especially when you have 3 and 4 year olds working. You know, we don't like child labor unless you have a family farm, then child labor is perfectly fine. So it wasn't because farming was safe and industrial was dangerous, because farming was such a small business that it just wasn't regulated. The numbers I found was we went from 96% to 2. I can't remember where I got those numbers, but it's amazing how few farmers we have producing food for billions of people. I forget the numbers I saw for China, but it was something comparable that they're moving from 90-something% down below 50 and really moving a lot of people out of the country into the cities, because you don't need all those people. When you have sustenance farming, then everybody's just growing food for themselves. But these big corporate farms are producing tremendous amounts. And so where are these not, our unemployment rate is not 94%. So they found jobs somewhere. What are all these people doing? Well, it's the new job. We're no longer in the industrial age, but that doesn't mean you move from industrial age to the knowledge age, you no longer need workers' comp. It's just the nature of the injuries have changed quite dramatically. When we first started out, employees were actually in worse case on a liability standpoint than a complete strangers. And the reason for that is the employer could threaten the employee. They probably didn't have much sway over a stranger or a customer, but if they tell you you're going to lose your job if you try to sue us or anything, like, bring this up to the authorities, that gives them some power. Trying to get other employees to testify for you is the same issue, fear of retaliation. And then the employer could say, hey, it wasn't our fault, it was the other employee. So these 2 employees, one didn't follow the rules, one did, but the one that didn't follow caused damage to both, so it's not our problem. So they're just saying, hey, don't blame us. We had a worker that we hired and trained that messed up. And then the assumption of risk, which was a huge one. The argument, and this was a pretty strong argument that was made earlier in our history, was if you're going to work in a coal mine, it's very dangerous, so you'll demand a higher pay and you'll get a higher pay because no one's going to work there because it's so dangerous. And so you need to make it safer. We're paying you more money. So we could spend all this money making it safer, but instead we'll let it be dangerous and we'll pay you more. And you seem to like that because you're coming here to work for us. So that was the argument. That doesn't sound like a great argument today, but back then that was accepted. I don't know if you know what coal mines are like. There's a great George Orwell book of coal mining that I encourage you to read. Pretty eye-opening book about just how horrible these people's lives were. Not a very fun way to live, especially before a lot of this regulations happened. So that was the environment. We go from the farm to the industrial side, and workers are told, hey, you're out of luck. Sorry, you got injured. So then the new environment came along where courts started chipping away at these defenses, and they became required to provide a safe work area. Now, I don't know when OSHA was created. It'd be interesting. OSHA at 50. When was it 50? All right, 1970 under Nixon.
1920,
We see 1920.
is it 50? 50 years? Minus 50.
No. 50 years from today, from 2020. So 1970, enacted in 1971. So yeah, it's about 50 years old. I don't know if there's a connection with OSHA and other types of insurance besides workers' comp. Probably not too much. Yeah, there's interesting. This is a pretty good website here. There's the, yeah, and so Cody, I don't know if you get into this, but workers' comp and 9/11 is almost a paper all by itself. A lot of 9/11 was workers' comp related claims, because obviously a lot of people died on the job. Obviously, there's also the personal lines. You could almost write a paper on what did we learn about insurance from 9/11, because obviously that was such an extreme event. We'd never seen that before. You might be able to bring in the Oklahoma City bombing as well. None of you are doing terrorism and insurance, but we learned a lot from those two events about insurance. But the OSHA's been around about 50 years. If you think when the regulations ready came in, Teddy Roosevelt during that time was a big regulation episode. So much, more than 50 years before Richard Nixon. That's when you see a lot of the some of those are more focused on the consumer, like meat safety and those kind of things. But you also saw child labor laws and those kind of things being hit. So so you see more, earlier 19th century, 1900s with the Roosevelt campaign and some of the stuff went on there. So the environment's changing. Employers are starting to get sued. And so we need a compromise. And so workers' comp is this compromise. It's a compromise between no protection for employees versus employers getting sued so much they can't operate their business. And the US is at this huge disadvantage to other countries. And so we say we got to find some compromise where US businesses can operate, not be at a disadvantage, but employees have some protection. So Wisconsin was the first state. So over 30 years, 35 years, all 50 states passed workers' comp laws. So this wasn't a federal government thing. This is a state by state. One other thing you might want to do for all of your topics, but the NAIC.org. They will probably have a committee on your particular issue. So if you do telematics. The NAIC, now you might say, okay, a bunch of regulators. I don't want to read something, a bunch of regulators. I don't think the NAIC actually writes anything. They go out to the insurance industry and they write stuff, and that's usually really well put together. Quite impressive stuff. So telematics and auto insurance right there. Yeah, it's more of a presentation than a paper, but it looks like there's could be some really good stuff there. I have no idea what that is. If you do, they probably have a committee that does nothing but workers' comp. Yeah, there it is. Workers' comp involved as a compromise between labor and management. Injured employees agreed that in exchange. So we'll get into that. They got our workers' comp task force, terrorism risk insurance act. You notice that this is under workers' comp. Those terrorist events, unfortunately, usually have workers' comp because of the way certain places that were targeted. So yeah, I mean, look at that. There's 10 pages of articles. So NEIC is a good source. Don't assume it's going to be a lot of regulatory legalese. There's going to be some good stuff out there that you can do. And that's because workers' comp is regulated by the states. It's a big part of the insurance. And so the NEIC is going to have an entire committee that does nothing but look at workers' comp. What the NEIC does, and we'll talk about them later, is their goal is really to keep the federal government out of their sandbox. So they want to make sure they manage these products well enough that people won't go complaining to Congress. So the Congress takes them over. They want to keep Congress out. So they work together to make sure every state's working well, that everybody's, you're not getting major complaints. So that's how you can get in 35 years, you can get all 50 states to incorporate workers' comp in their laws. And they're all based on the same premise of strict liability. So whenever you see strict liability, what you're saying is we don't care who's at fault. There's no negligence. You don't have to prove negligence. So strict liability, a good example is firms that do blasting. So if you're doing blasting with dynamite, and if someone's windows break, they don't have to prove that you're negligent. You can't say, well, we did everything by the books, everything was fine. No, you're blasting. That's dangerous. Windows were broken, you're going to pay for it. They don't have to prove you're negligent. That's what strict liability is. If you're a piano mover, the piano falls and crushes somebody, you can't say, hey, we followed all the rules. It wasn't our fault. There's something wrong with the rope. No, you're doing something dangerous, strict liability. You're doing it, someone gets injured, you're liable, and it takes off the burden of proof of negligence, which is huge. Now you might say, why in the world will the employer agree to that? And the reason they agree for that is that the employee agrees not to sue the employer for all these extraneous pain and suffering, all these other damages. You do get some pain and suffering, but everything is scheduled by the state. So the state's going to tell you, hey, if you broke an arm, this is exactly what you're going to get. You don't go to court and say, well, I think I should get $50,000 more because I was really hurt. No, everything's, if you lose a toe, this is what you get. So everything's scheduled by the state. Now, what I don't understand, and this would be, if someone, Cody, if you do this, anybody does this topic, this is the question someone should answer for me. If employees agree not to sue, why are there billboards on I-10 for workers' comp personal injury lawyers? That would be a great question for someone to answer. So, workers' comp lawsuit guide. There shouldn't be one, right? Strict liability, employee agrees not to sue. So how do you make a work injury claim? Compensation for work injuries. That looks like a pretty good article right there. When can you file a workers' claim lawsuit? In most cases, you cannot file a lawsuit because you must recover your monetary compensation through the claim. There are, however, some limited exceptions. Why is it some limited exceptions when I see, have y'all seen the billboard on 10, haven't you? I forget which lawyer it is. It's one of those. Some limited except there must be enough to keep his business going. To workers' comp rules that prevent you from suing an employer. Your employer intentionally caused you to suffer an injury. This requires more than mere carelessness. You would have to show your employee meant to hurt you. How often does that happen?
It's not just billboards, it's also every other commercial.
I don't have TV. Yeah, I wouldn't know. So I guess it's possible. Your employer doesn't have enough workers' comp coverage. Okay, that makes sense that, you know, you're covered, but you don't have enough, so you can go and sue them. I can't imagine that's what these personal injury lawyers are doing, though. There's no way his entire business is employers intentionally harming their employees, unless y'all are working. The work environment has changed dramatically since I was at USAA. If someone else besides your employer wasn't responsible for your injury that occurred on the job, you can also file a third. Yeah, obviously. One other issue that I think is interesting. I was even thinking about Law and Order when we were talking about this. I think I've seen some Law and Order where the employer intentionally harmed your employee. But flight attendant suit. 1 second. Is it coming up yet? So there's a major lawsuit. A flight attendant, say, y'all don't know this, but you used to be able to smoke on a plane. Can you imagine? Because I have a real bad reaction to cigarette smoke. I don't have anything against smokers, but it's just a really bad reaction. And oh my word, people smoked on the plane. Then they said, well, you have to separate it. So they sat in the back. Well, I mean, sitting in the back doesn't do much. I remember USAA had smoking only snack areas, and from like 100 yards away, when you have 50 people all getting one place to smoke, you know, it's just all in one. So it doesn't really work. And everybody's in the back smoking. It all comes up to the front. But these flight attendants had to work on these planes. And so they had a lawsuit because they said our cancer rate of lung cancer is higher than it should be. The question is, was that a lawsuit against tobacco companies or was that a workers' comp lawsuit? I'd be really interested in that. Here's the settlement. Landmark, 60,000 flight attendants have wrested the historical settlement from the tobacco companies, charging that they suffered smoking. But was there a workers' comp? You could see this would be a workers' comp claim, though, don't you? They were forced to work on these planes, but allowed people to smoke. Now, I don't know how chain smokers make it 5 hours on a flight. Now it's going the exact opposite now. In fact, they can't even smoke in the airport, right? It's like they had to get. When USA made no smoking anywhere in the building, we had one chain smoking CFO, and every 30 minutes he got in his car. You couldn't smoke in your car on campus. That's how strict they got. So every 30 minutes he got in his car, drove off campus, smoked, and came back. It was very inefficient. I felt sorry for the poor guy because he just couldn't stop. But so there's some really interesting workers. I mean, there's cases where you're asking who is being sued. If it's workers' comp, I'm guessing in this one, I know for sure that they sued both. I would guess it would go in both places. Same thing with asbestos, right? Asbestos is normally a workers' comp claim. It's possible it could be a non-workers' comp claim. All right, so the employee agrees not to sue, but then you see these law firms that are advertising specifically for workers' comp. The benefits are scheduled, so that keeps it out of the court. So that's part of what we're trying to do. That's part of the complaint employers had. It wasn't so much that we don't want to pay for the harm we cause. We just don't want all these lawyer bills and all this time and effort. So, you know, we'll pay it, but just make it easy for us. Administration is regulated by the state governments. Every state's a little different. What happens, and I think I mentioned this before, you work for Xerox and you're injured by a Xerox machine on the job. Can you make claims both under workers' comp and sue them for general liability? And so there have been some cases of that. In fact, I think that may be where the flight attendants are. They're injured because of their employer, and they're also injured because of the tobacco companies. In the 80s, workers' comp just blew up, became a disaster. And every state were seeing their workers' comp. Just the main thing was just huge losses of money from the insurance industry standpoint. People couldn't buy workers' comp, so they had to fix the system. A lot of this was related to the healthcare aspect of this, where healthcare costs are rising dramatically. And I won't get into this. I talk about this a lot in my life insurance class. But what was happening is managed care was taking off. HMOs and PPOs, they weren't saving money, but they wanted to look like they were saving money. So they were cutting their prices to do more HMOs, and they were shifting all that to all other health insurance, and which means workers' comp picked up this. And so finally, everybody moves to managed care, and then healthcare just shot up because there was no one else to pass the cost on to. So that was part of the problem, is they had costs shifted to them during that time. A lot of fixes were made during that time. I haven't heard major workers' comp issues come up since then. So it sounds like for the most part they fixed the issue. All right, so this is an old survey. I should get y'all some more recent numbers. Workers' comp is very industry specific. Construction, obviously, workers' comp is a huge issue in construction, and services not so much. Although services has certainly had its special issues come up, but it's a huge issue. And this is an industry. Obviously, it's a challenge because you're dealing with so many subcontractors, and there are rules in workers' comp about how many employees you have to have where it's required. And so it's a mess because, you know, my word, when they remodeled my house, I don't know how many different businesses came in. They subcontractor, and I just hope they had it all coordinated. I don't know how many of those workers actually had workers' comp. All right, so let's get some definitions here. So the most normal definition is workers' comp covers all employees unless they're excluded. So you see a few examples there. Agriculture employment is still not generally covered by workers' comp. Very, very small businesses, but I don't know what the break. How many workers in Texas to require workers' compensation? Are employers required? Texas is the only state that does not protect its labor force by require employers to carry workers' comp. I don't think that's true. Wow, that'd be interesting. No, Texas, I had no idea. I think it's because every employer I've ever dealt with in Texas has workers' comp. So wow, that's very interesting. All right, so Cody, if you do that, you need to research that. That's interesting. Yeah, and you can go crazy on this topic. Every state's going to be a little different, so a lot of unique stuff. So I don't know what very small means. Every state's going to be different, so it'd be interesting to kind of figure that out. Every business I've ever dealt with had workers' comp, even a business that had 5 or 6 employees. So it's just part of the general insurance that we were buying. So most of you aren't going to worry about it. Most of you are going to have workers' comp. Just think about it, because you're going to be working in some big corporation or it's some actuarial firm or something, and it'll just be part of the coverage. What does it cover? So this is where a lot of the debate is. Accidents arising out of and in the course of employment. Now that we have people working from home, obviously that definition gets a little stretched, but arising out of and, not or, and in the course of employment. So that generally means if you're on break you lose your workers' comp while you're on break. But when does break start? When you stand up in your desk, when you walk, when you're in the break area, when does it start? When does it stop? Covers diseases. So obviously a lot of asbestos is covered here. Not covered, an employee intoxicated at work. Now there can be exceptions to this in certain states. Injuries occurred away from work. Now this is an issue. We'll talk about this. You know, you can almost tie in autonomous vehicles with workers' comp. Because with autonomous vehicles, we can now spend our work times in the car driving to work. So when does it stop? When does it start? My boss, oh boy, I had the boss. He never stopped working. He was constantly on the phone. Anywhere he's driving, I would always be like, oh, whenever he called. And then one time he's walking up the hallway when I was doing that. It's like, you know, so you could see how, but he just called me all the time. He was in his car just constantly. Well, let's say he had a wreck because of that. And we're going to see an example of a nurse who did a lawsuit workers' comp because it was her argument. I'm required to be on call all this time. I'm not on the job, but they require me to be on call. So if someone pages me and that causes an accident, I'm on the job, you know. So what does it mean to be away from work, especially if autonomous vehicles means we're going to have our first staff meeting while we're driving to work on a Zoom of some kind. Heart attack at work. Now there can be a general liability here. I remember at USA, anytime there was a heart attack at the job when I worked near risk management, they went in detail who was called, who showed up first, who called the ambulance, how did the ambulance get in, how long did it take for us to call, you know, all of that kind of stuff. If we did something wrong, USA could still be sued for, you know, from a general liability standpoint, but it wouldn't be necessarily a workers' comp. Now, some people have made the argument that the stress of the job is the reason I had heart problems. We'll talk about that, especially when we talk about some other ailments. Injuries during coffee break, but then when does coffee break start? Transportation to and from work, but now with cell phones, I think that has changed. So that's got to be a big issue. And then people just goofing off at work. But again, this is state by state by state. Every state's going to define this differently. California is a state that has really gone the most out on the limb on defining what's covered. And it's actually to the point where there's stories of people moving to California to take a job just so they could get the coverage and essentially claim coverage they already had, you know, essentially get covered for stuff that they couldn't get covered anywhere else. And as soon as they started their job, they were suddenly getting coverage. All right, benefits, again, health insurance. It is coordinated, so it's coordinated with other insurance generally. If it covers, we'll talk about disability. If it covers income, it's not going to cover 100% income. It only covers 70%, mainly because it's an insurance benefit that's generally not taxable. What they don't want is to encourage people, and I have both morale and moral. There are people who break the law to get workers' comp. I'm going to show y'all, probably not this class, but I'll show y'all next class some videos of some workers' comp claim, some fraudulent claims. So there is some illegal activity, but what they're trying to do is there are people out there that rather be at home getting workers' comp than working. If they can either get injured or if they are injured, not come back. That's that morale and moral hazard. So it's coordinated with other insurance policies. We don't want someone to have this big windfall because they have 3 different policies are paying for them. It does cover medical, so it is health insurance. It is disability insurance. It's important to remember we're talking workers' comp, which is covered by the property and casualty insurance industry. Health insurance and disability income is covered by the life insurance industry. So this is workers' comp. It's kind of strange. When insurance broke between life and P&C, most stuff is pretty obvious what went where. Workers' comp is the one where it's like, where does it go? health insurance, workers' comp. So health insurance, disability went over on the life insurance side, but workers' comp stayed on the P&C side, probably because of the corporate commercial aspect to it. So disability income, you may not notice when it's going to be paid. So there's so many of these. You got paid time off, you have sick leave, and then you start having the workers' comp types, short-term disability, long-term disability, and then FLMA is an unpaid leave. So you've got all these different categories. You as a worker may not really tell which one you're under. USAA eliminated sick leave. Does any firm have sick leave anymore? The employees just say, hey, you know what, we'll just give you, if you need time off, you take time off. If you're sick, you're sick. You know, so that's what USAA just went to paid time off. They have short-term and long-term disability. They cover it under workers' comp. You also cover it as an employee benefit. Do you care if the disability is coming down to workers' comp or through their disability? You may not care, but USA cares because one is an employee benefit that's regulated by the federal government, and one of them is a workers' comp benefit that's regulated by the states. But you as an employee just say, hey, just pay me money. I've been disabled. The first question I ask, were you on the job? Yes, I was on the job. Okay, well, this is going to cover you. No, I wasn't on the job, and this has covered you. So most of y'all are going to get disability coverage. It doesn't have to be job related. And you know, you'll be covered either way, whether you're injured on the job or off the job, but your employer cares a lot. Now, what kind of disability was it? Were you totally disabled, permanently disabled, temporarily disabled, permanently disabled, but temporarily, permanently disabled, permanently, temporary total disability. So you're not going to be out forever, but you can't do much. There's a waiting period. It's much like a deductible, mainly to try to get the smaller claims out. So if someone's out for 2 or 3 days, just let them be covered by sick leave or whatever paid time off. If you go beyond the waiting period, then it will come back and go into workers' comp. And so you don't care again as an employee, you don't care, but the employer will know which pocket it comes out of. Permanent total disability can go for an entire lifetime. Sometimes they stop at a certain age, like at retirement age, but the disability can go the whole lifetime. Permanent partial disability, so you're disabled your whole life, but you can do other things. So you can go back to work, but not 100%. And then there's other things where it's just scheduled. And this is what you'll get for a loss of a leg. It does cover death benefits and funeral costs, so there is a life insurance aspect to it. In fact, most of workers' comp really belongs more in the life insurance industry than the property casualty. There may be something for your benefit for your survivors. And then growing, we'll talk about this, the rehabilitation side of this, because they want you to get back to work, so they want you to rehabilitate here. The first time I noticed this at USAA, you wouldn't think USAA has a lot of workers' comp, but suddenly, 89, 1990, suddenly USAA had a massive number of workers' comp claims. Can anybody guess what those claims were? 89, 1990, before you even born. What was going on in the late 90s and late 80s that we had never done before?
Wet floor signs?
What?
Wet floor signs slipping or something?
No. USAA, when the floor was wet, the cafeteria put up a sign, caution wet floor. And I was thinking it'd probably be better if you mop the floor, because there's one time they did it was like a skating rink. So I'm thinking, okay, you just put up a sign saying this is really dangerous. So now you advertise that you know it's dangerous, and it is really dangerous, so dangerous. And then they put up another sign that said, warning, high-speed escalators. So now you're admitting a really dangerous escalator. So I'll take a picture of that. But no, it wasn't those claims. They didn't suddenly start. What were we doing in 1989 that we weren't doing in 1979? What am I doing? So no guesses?
Wait, was it carpal tunnel?
Carpal tunnel, yes. I remember when it first came out, the management was like, oh, these babies, they're complaining about, they're a little sore in their thumb. Why are they complaining? And then after about the 1,000th claim, they're like, okay, maybe these aren't all a bunch of wimps. Maybe, and then they're noticing people that really were seriously injured. They could not do anything, especially a lot of court reporters were just, they just, very, very serious injuries. And so USA had to address that. I don't know, it hasn't been as big of an issue since, just firms have gotten a little more cautious about it. They started redoing it got really frustrating because they redid all the desk. So if you go to a friend's desk, suddenly their desk is 2 feet lower than your desk and you're like banging your knees. So there's a good workers' comp claim. But yeah, that was the biggest thing. So USA workers' comp, yeah, who cares? Not a big deal. And then USA hired a hand doctor. It's like you have a guy who does nothing but hands. Yeah, that's what he does. He's a hand doctor. That's how big corporate tunnel became. So yeah, the working environment changed dramatically when computers came along, and I don't know if it was different. We used to have these type rooms. You hire a bunch of people, data entry. I don't know if typewriters are different than computers when it comes to the carpal tunnel, or if we just didn't care about carpal tunnel back then. But that was a huge issue. All right. So rehabilitation is a big part of that. How do you carpal tunnel? I got a good friend who's like a world-class bass player, and he had carpal tunnel. I think, well, that's pretty terrible, but he was practicing his bass so much. But he's recovered. So you can get off the instrument or whatever, the typewriting, and you can recover, but you got to catch it early. That's the one thing USA discovered. I worked in workers' comp for 1 week at USA. I thought I was going to stay there longer. My boss in my previous department wanted to go back to his old job, so I had to go back and take his place, which actually worked out pretty well. But we went to one meeting in workers' comp. I went to one meeting. The workers' comp insurance came in with a stack of paper that high, and they just went through folder by folder. How's Mary doing? How's Tom doing? Most of them, almost that entire stack was carpal tunnel. It's one after the other, and they come back to work. Those kind of things. This is probably out of date, but every state's a little different. There are some states that do have their own workers' comp insurance. There are some states that allow competition against the state itself. You can do self-insurance under certain circumstances. Today is the first time I heard that Texas isn't required. I'm still somewhat skeptical that that's entirely the case. All right, so what I want to do, well, I want to just start here. I want to go through some issues, and if some of y'all do papers or workers' comp, I may add some more issues that may be your challenge if you do want to do workers' comp. There's a lot of meat on workers' comp, so if you want to add to my list of major issues here, I think that would be really helpful. To me, the biggest one is, well, I guess it's under here. It's the changing nature of work. And so I'll show you some. Here's the article I was talking about. So we'll talk about this article. Hospice nurse on call. So this was a workers' comp claim. I don't know if this was precedent setting or not. I'm sure you could probably find some other claims related to people driving on the phone with their job, and whether or not that went under workers' comp or not. So we'll look at this article next time. All right, I'm going to stop there because I don't want to start something new. Okay, I want to get through workers' comp, our last product of all, and then we'll get into some number crunching finally in this class. Although I've done a little number crunching with the catastrophe bonds. So if your employer has workers' comp, what they probably will if you're a large size firm, what's actually covered. So, so the benefits we talked about: medical, disability, death, funeral. Every state's very different. Workers' comp may be even more different than auto, home, and general liability. It's one of the more unique ones. Every state has their own kind of view of what is work related. So what are some of the issues that are causing major havoc in this industry? at the time that workers' comp was reworked dramatically, it was the rising medical costs. It wasn't the disability, it wasn't funeral costs, it was the medical cost. So they moved more and more to, like everybody else is doing, more to managed care, which didn't actually affect things. I don't know if you could do a paper on the effect of Affordable Care Act on workers' comp. There may be something there. I doubt there would be enough for an entire paper, but there are some implications. Just because workers' comp is significantly medical. Loss control is huge. We talked about this earlier when we talked about why corporations buy insurance. And so I think I mentioned I saw this at USAA when I spent that 1 week in risk management. A lot of our time was on workers' comp. And I was very, very impressed with this outside firm, how well they knew our employees, how closely they're working with them. They knew each, they had a stack of 50 employees. They knew each one of them individually. That's something USA wouldn't want to spend time doing. But USA wasn't their only clients. So these two people had several clients and they knew the entire book really, really well. So it saved USA having to hire those people to do that. So when you do that, your insurer knows you. They're doing work that you don't have to pay for. And then you get better pricing from the insurer because they know what you're doing. They understand your business. They understand how you treat your employees. The insurance company can actually use the insurance itself as an incentive for the company to do certain things. So that's an advantage. The problem with experience rating is you have to be a big company, first of all. If you're not big enough, your experience doesn't really work. So the school I helped out with, they didn't have any workers' comp claims at all for probably a decade or more. And then suddenly they had 2 huge ones. And they noticed that, you just can't base it off of that. USAA is probably large enough with 40,000 employees that you could price it almost specifically to them. But there's also a political process. We'll talk some about the political process on auto insurance, but there is somewhat of a political process on pricing workers' comp insurance that doesn't give the insurance company the right to really do exactly what they want to do. It's not nearly as political as auto insurance, but there's still that. And it varies by state. The biggest issue of all by far is when an injury was arising out of and in the course of employment. So California is the state that added mental illness as a covered, and mental illness, I don't know if you've seen some of these pharmaceuticals are quite expensive. And if someone's working on a job and they have this huge expense, and California now says, hey, this will be covered workers' comp, people had an incentive to actually leave their job and go to California and get a job. You're talking thousands of dollars a year in medications. Yeah, it'd be worth it. So California actually had a pretty big issue with that. And then establishing the causation, same thing with stress related to heart ailments. How do you know the job is what's causing these problems and it's not, something going on at home and other places? So it gets a little tougher. Industrial diseases, it's pretty easy, but then with asbestos, we said, but which employer? So then you still have that issue. We talked about the secondhand smoke. That I think would be an interesting. And then workers' comp is often the system that judges will go to when they can't find any other place. So you got this poor person, dire straits, and they'll say, well, we'll have workers' comp pay for it. They're not really responsible, but no one else, and this person's in bad shape. So it becomes a welfare system.
Sir, just a quick question.
Uh,
Isn't it true, like, if you have seizures, you have to disclose that information?
Oh, I don't know.
But
I don't know, if that's a state or an OSHA, that may be more of a federal government.
yeah,
Research
you have to let them know if you have seizures, they know.
The issue at USA, I don't know about seizures, but the issue at USA was diabetes. We may have talked about this before, but people who were having to use insulin were putting their needles into the trash. Did we talk about that? So they're actually putting and this is during the AIDS crisis, and the facilities people I've learned this, when I go to the hotel, I've learned this, the facility peoples hate changing trash bags. And this one guy was explaining to me, it's a lot of work. They much rather dig in and pull the trash out because having to change the bags. I don't know if y'all seen those bags that they're really unwieldy.
Also, I know about razors and all that, and that.
Yes. These are actual needles though. And so you can imagine someone reaches in and they get stuck right in the middle of, we have a epidemic going on. And so they put signs up on every trash can, don't dump your needles here. But I was asking the facility, well, why do y'all do that? And he was explaining, yeah, it's faster for us to pull the trash out than it is to replace the bag. And so now when I use a hotel, I don't put anything in the trash can.
Sheet or something.
Huh?
Like there's like a rag with blood on it. Can't just throw it in the.
Yeah, well, I'm not sure they would notice that because they do have gloves on when they're working. So, the needles was a bigger deal. That would be a workers' comp claim, they're doing their job and that could be a pretty serious one. But the biggest one, this is where some really good papers could be written from. It's just the changing role of work. And I wrote this before COVID. But work from home is going to be a huge one. And here's the one I want to cover. We talked about this last class, but let's look through this because it's a fairly interesting. So someone, I think, is doing their paper on distracted driver, but here's work-related distracted driver. And so she got workers' comp benefits. Distracted driver was awarded workers' comp benefits in Virginia for an accident that the claimant says was caused by her work-related cell phone. Now, this is in 2010. They did have cell phones in 2010. It was probably more pagers than cell phones back then. I don't know if any of y'all never had pagers, right? I don't even know what those are. So I never had to have a pager because I was never that important, but nurses, doctors, they have pagers. So this lady, a hospice nurse, on-call employee, she was required to be reachable by pager or phone while on call. The procedure for contacting is so these are the rules she has to follow. All right. So this is her argument. I have to do this required by the job. The employee was contacted through a pager, and if she failed to respond in 15 minutes, she was paged a second time. She would then be called on her personal cell phone. If she didn't respond, she would be called on her home phone. And there's probably some consequences if you let that happen too many times. So you got to be available because if there's a major accident or something and there's a lot of people coming to the hospital, they need you to get there quickly. To be available, she always kept her beeper and cell phone with the ringer on in her front pocket. At the time of the accident, she was driving home from work when her cell phone light caught her attention and caused her to glance down. Subsequently, she drove her car off the road onto gravel, wrecking her vehicle and injuring herself. All right. Now there's some negligence, you could argue, well, the way she did it was just so lousy ago, you could maybe make those kind of arguments. That's the facts of the case. She sought medical payments from her employer for the whiplash she suffered. She argued that if she hadn't glanced down, she wouldn't have had the accident. The employer defended the claim, arguing that her accident did not arise out of her employment. So here's how Virginia defines it. If there is a causal connection between the claimant's injury and the conditions under which the employer requires, so that's the key. They're going to look at what did the employer tell her she had to do and how close was that link. Was her glancing down really the cause of the accident? I guess the employer can argue, well, we don't require her to glance down, but that kind of is implied. The injury must be able to be fairly traced to the employment as a contributing proximate cause and does not originate from a hazard to which the claimant would have been equally exposed apart from her employment. Now today, people are looking at their phones all the time. They're not specifically related to their job, especially a pager. Pagers are usually related to your job, right? That's why you have a pager. So there's more distractions today. So they might be able to argue, well, today, she's getting all kinds of calls, not just from us. And if she's looking at them, Could be from us, not from us. You know, it's not necessarily our fault that this happened. She used her cell phone for both personal and business, so that's probably a big part of it, and not her employer. She paid the bill for her phone. It was unclear if the call that distracted her was business related or personal. Oh, that's kind of interesting. This is still 2010 though. Based on these facts, her employer initially urged the commissioner hearing the matter distinguish the case. Going to other cases, her employers instead encouraged the commissioner to follow this other case and find that she was not performing a required act, and that would one that would distract her from the safe operation of her vehicle. And so the commissioner decided that the employer was liable and stated that if it didn't matter who footed the bill for the cell phone. What mattered in this case was a duty to be attentive. So the employer is saying, you got to look at the phone. So I think the argument I would make is the reason she looked at her phone was because the employer required it, which means if she wasn't in this job, would she look at her phone? It was from a friend. And who knows? But, you know, I never look at my phone when I'm driving. There may be 2% of the drivers out there that are like that, but I just put it away and don't look at it. Is it a good chance she would have looked at it if she wasn't in this job? Yeah, but I mean, that's, you know, that's kind of what they're debating. But maybe the court's saying it doesn't really matter. They require her to be attentive. So it doesn't matter if it's from her friend or not, she's going to have to look over it. All right, so what does that imply? The mounting negative impact of using your cell phone while driving has on their ability to safely operate the vehicle. It's no surprise that this is a hotly debated issue. Many states across the country have completely banned the use of cell phones while driving, and others are limiting your use. The best way an employer can avoid liability is to draft a cell phone use policy for employees to follow. In addition to creating such a policy, employers should require each and every employee to read the policy and sign a contract stating they will comply with it. The policy should advise employees to stop their vehicles before taking a call, and if they expect a work-related phone call while driving, to plan in advance to be parked at a safe location before taking any calls. Do you think that's going to actually happen? It's tough. I follow that. If I know I'm expecting a call, I mean, I come extreme because I don't want an accident, but if I know I have a call coming, I get on the frontage road so that I can easily pull off and stop and get the call. I'm not on the freeway. It's rare that I'm expecting a call because there's not many people that call me anyway. So, but you know, but if I know someone's, you know, that said they're going to call me, then yeah, I make sure I can easily get off and stop. But I think I'm an extreme case. I don't think most people are like that. How far an employer needs to go with their phone call policies for debate. The U.S. Department of Transportation is leaning toward an all-out ban of cell phone use while driving. All-out ban, I guess that means hands-free as well. But this is back in 2010. So think about it from the employer standpoint. They want these workers to respond quickly, but they also don't want to be super distracted driving. So it's kind of, you know, how do you write your policy? And then here we're talking about, you know, someone in the medical field where a hospice nurse, you know, probably needs to be able to get to work pretty quickly if there's something going on. But these are cases that define policy. They probably impact different states as well, because once one state has the issue, it can become a precedent for another state. What are people who actually drive as part of their work, like sales reps? They're in the car all the time. Working at other people's sites, like consultants. You know, consultants is a good example because they're constantly in other people's workforce buildings. You know, I would assume a lot of that is just automatically covered, but you know, it does change the dynamics. Partial retirement, people working part-time that are older, that changes the nature of the job. The nature of the work itself, keyboards, obviously. So what's the new thing coming in? USA tried this thing. I don't think it was too popular. I don't know if y'all have seen this, but the shared desk, any of y'all having to do that? Where one person works 3 days a week, the other one works 3 days a week, and they share a desk. It's kind of, to me, disgusting. I never had to do that, but it sounds horrible to me. But you know, how is that going to impact? Did USA think about workers' comp issues of having this new policy? COVID, pandemics. I think there probably were some COVID and workers comp. COVID workers comp national conference. I'm sure that issue has come up. The impact of COVID-19 on workers' compensation. They say 3 aspects of it. So one of my students did write her entire paper. I should show you, I will show y'all some example papers, not for you to follow them because everybody's can be different, but just so you can kind of see. Hers might be a little intimidating because she thought of things I would have never thought of, but certainly this, you know, this is the kind of article you're looking for. Something from KPMG would be great. So here you have, this may be a little long. It's a PDF. Let's see how many pages this is. 16 pages. That's kind of what you're looking for. So remember, your paper 2 is not a research paper. So you're not looking for hundreds of articles, but you know, a 16-page article like this with a bunch of pictures too. Then it gets really small. So this looks like this could be a good paper to actually try. So the question is, when does COVID become a workers' comp issue? Is it because they caught COVID at work because they're required to come to work? And you think about HEB worker, you know, HEB puts up the protection, they're wearing masks, but still, I don't know what percentage of HEB workers caught COVID on the job. Then the question is, where did you get the COVID? Did you get it on the job or from your kid that came home from the neighbor's house? You know, so there's some issues there. But 16 pages right there on this one issue. A lot of pictures too, so it's probably only like about 8 pages once you take all the pictures out. But COVID's not the only pandemic. We're gonna have other pandemics in the future that could be more stressful, worse, or they could be like the flu. You know, who knows what the particular issue is going to be. And then autonomous vehicles, that is going to become more and more of an issue now. You know, you look at what is it like at Amazon, where they have robots, unmanned robots working with employees? What does that do for workers' comp? And are there claims coming from that? So fully autonomous warehouse robot, kind of looks like one of those carpet. That looks really dangerous, doesn't it? Doesn't it look like something you're going to trip over every time you turn around? No, I think they have some warehouses where there's no people in them at all, don't they? Have they tried that, where there's no workers at all? That's a workers' comp issue, maybe on the good side. Do you care if the robot gets injured? There may be a repair, but you know, you don't care. Well, you know, 50 years ago, 50 years from now, we may have robots suing us. I mean, I'm not joking. If someone has already tried to get GPT to be the author of that have legal rights to an article, not a human being, but the computer software that wrote this article that have legal rights. So who knows? These people may get workers' comp benefits, but boy, that's kind of freaky, isn't it? Could you imagine being there at night with the lights out? And I don't even know why they have lights on. Do they need lights? So it's getting a little freaky. And there's a guy right there. So, oh, see, you don't have to worry about it because it stops for him. Yeah, I wouldn't trust that. This looks like an Amazon site because it's very positive. So robotics, you know, I should just add that in there. I think robotics more than autonomous vehicle. I guess a robotic is an autonomous vehicle. So the workplace is definitely changing. I don't know if AI would be one. I don't know how that changes the nature of work in a way that you could get injured or harmed in any way, but there's so much there. And COVID has changed it dramatically. It's pretty amazing. The Economist had just dozens of articles, but they're talking about in Britain that work from home was so negatively viewed in Britain that if you work from home, you're like one of those employees. And COVID radically overnight changed that entire thought process. So Britain went from being like 20, 30 years away from working from home to immediately work from home. And that's pretty major for something like workers' comp, where you just suddenly overnight something like that radically changed. And now you got to figure out as an actuary, what does this mean for our claims? And what claims are we getting from the home office that are different, the frequency, severity, that's the kind of thing to look at. So just so much to deal with there. Fraud is an issue anytime you're talking about disability income. Not so much for the healthcare side. I mean, it's possible someone has a medical issue that they got playing football on the weekend, that they try to make it look like it's work related. I'm sure that's kind of fraud has happened. But most people is when they fake an injury so that they don't have to go into work and they get workers' comp or disability. There's plenty of YouTube videos out there showing you this stuff. You never know if it's workers' comp, Social Security disability, or disability. You can never tell which one it is. Most of the ones I've seen have been Social Security related because they're stories, news stories on the taxpayer getting ripped off. But they're all very, very similar with someone faking an injury. I think even The Office, y'all don't watch The Office, right? I know y'all don't do Seinfeld because it went off probably before you were born. But The Office had one of those with, is it Oscar? Was at home faking, I think he was faking an injury, wasn't he? And good old, what's his name, was trying to find him. So it's, that's illegal. Oscar could go to jail for that if he was really, faking it. Now, the Coalition Against Insurance Fraud probably is going to give you exaggerated numbers when it comes to how much fraud there is. So I don't trust those numbers. They say tens of billions of dollars. So where is the fraud? So it's not the obvious ones, but we'll talk about the obvious ones. So one is a worker gets injured away from work, and he gets his buddies to take him to work and throw him down the escalator and say, "Hey, look, I got injured on the job." That would be illegal, but trying to, maybe they didn't have medical insurance and they're trying to get this covered, or they don't have disability. Inflating injuries. So you have a minor injury. If we see one of these videos, you'll see this guy. I think it's in one of these videos that he's slamming his hand with a ruler so that it'll be red every time he goes in. That's pretty radical. That's a person who hates his job and he wants to stay off. So minor injury, but lies about the magnitude in order to collect more workers' comp. Faking injuries, obviously, we'll probably see a couple of those. An old injury, so you have an old injury, hasn't quite healed, and you somehow make it look like it happened on the job so you can get it recovered. Lingering. So you're at home for a legitimate reason, but you stay longer than you really needed to. The key here we'll see when we talk about how the employer handles this is you've got to get to the employee early, get them thinking about coming back to work so that they don't get that thought in their head that, hey, man, this is kind of nice. Abuse is sometimes, so some of these fraud claims may not really be fraud claims, but maybe more related to our healthcare system, where a doctor orders a test that they really weren't supposed to order, and then they find something. So they say that's fraud because they shouldn't have ordered that test, but then they find something. That to me doesn't sound like fraud. So I don't know which of these to start with. Let's try this one. Let's see. Bill. I'll try Bing because Chrome is just not working at all. All right, let's see if it works.
Tell us so this man can get it on
All right.
film.
This one's somebody I've used this for. This one's almost too painful to watch, but I want you to see the extent someone will go to stay on disability.
Picture what your name is. When Mark Cohen put in a disability claim on a slip and fall accident, he had a myriad of different maladies to choose from. What did he choose? That he had been left with the intellect of a 5-year-old child. That was he lived in before.
So this is what he chose. He now has to keep this up for the rest of his life anytime he goes in public. So not too smart. Maybe he does have the intellect of a 5-year, or at least comes when picking strategy.
Apparently not realizing that this would have to be his public face for the rest of his life. Cohen sold his new persona to his insurance company during a videotaped interview. Then he went on with the rest of his life, his normal adult life. He even kept playing golf, which is where the cops arrested him for insurance fraud.
So do mention the people, if you ever hear a friend talking about them, I mean, this, you will go to jail. These are felonies. They're pretty serious. And it doesn't matter if you do it against Medicare or Social Security or your employer or workers' comp. It's illegal. It's insurance fraud. Insurance fraud is a pretty serious, a very serious felony.
Once in front, Cohen slipped right back into a 5-year-old mode. Of course, he never explained why a 5-year-old was driving around in a golf cart and playing 18 holes. Most kids his age need a nap around the pit hole. You're successful.
Yeah, so this is the guy, well, just watch. His is not quite so-
Workplace injury.
Not quite so extreme.
Put on temporary total disability. He
So
worked
remember, temporary total disability. So this guy can't do anything. But he'll come back to work at some point. But right now, this guy walking in here, he looks like he could do stuff, but he can't do anything.
being temporary. But Steve apparently decided that he liked not working for a living and devised a clever way to extend the length of his stay on the disabled list. Right before his visit to the doctor, Steve would strike his formerly injured hand over and over. The hits would irritate the hand, giving it the appearance of being inflamed. He would do this in his driveway and in traffic on the way to the doctor's office.
Talk about distracted driver too, right? So that was probably when we cover workers' comp.
Unfortunately for Steve, his insurance company didn't trust his lingering injury and they videotaped his trips to the doctor. Soon after, Steve was arrested for fraud. He got 2 years probation and had to pay for the detective who caught him.
That's a pretty minimal penalty there. He didn't get, maybe because they caught him pretty early, but he didn't, probation. But to me, the bigger crime was that he's on a national TV program for all his friends to see him.
Adding insult to non-injury. Scamming for workman's college.
All right, so here's a guy with serious back injuries. Let's see how he's doing.
This might be a great idea if it works. But when it doesn't, well, that's when you catch people in some of the most unbelievable lies you'll ever hear. Like people who are so hurt they can't work, but they can go bowling. That's what happened to this guy. He filed a claim for an injured left knee that's
Oh, left knee, excuse me.
prevented him from doing his job. But an undercover camera busted him on the lanes, bowling in a couple of pretty nice frames, judging by his reaction. Of course, after the tape went to his insurance company, his days of getting paid to bowl were over. And his life was, well, in the gutter.
Yeah, so it's out there. I wouldn't recommend you try any, or you let anybody try these kind of things because it's pretty serious. There's one I really like that I want to show you. It's more Medicare related, but I think it's on this one. I'll skip through it. I won't do the whole thing.
It's a real lifeline for people injured on the job. It can keep you afloat financially until if and when you're ready to work again. But billions of companies or dollars are actually being paid out in bogus claims. And some companies say enough is enough here. Tonight, we'll take you inside one company that is fighting back big results. Does this guy look like he suffers with a bad back? Watch as he helps load his truck with heavy furniture. He makes several trips up the ramp, at one point lugging a refrigerator. Julio Recinos apparently wants you to think his back is so bad, he can't work at all.
He's fighting. Just recently, he cannot bend, stoop, squat, lift anything heavy.
And we'll say all of that right then. Until a year ago, Julio worked at Guess Jeans in maintenance, but he claims a back injury left him with pain so severe and so constant, he can barely stand.
This is far outweighs any work he was ever doing in Justin.
And this man who's currently under investigation also works for Guess. He claims to suffer with a bad right shoulder, the same shoulder you see him use to jack up his car.
Every claim I've done time since I've I have fixed it.
Perhaps these two workers had no idea Guess would fight back when they applied for
There's one.
But with thousands at stake, Guess called in Ted Turner, a private investigator who exposes people suspected of cheating the system.
There's one I wanted to show you, but I don't see it in here.
Courtier heads up the safety program for Guess Jeans. Fact is, they believe so strongly about their safety record and tough policy on fraud, they open their new.
I'm gonna skip to this one because I really like this one.
By solar panels, if you live in these 11 states of America. It's the worst decision.
Here's with ABC News investigation and
All right.
your
So this one's probably the most egregious, but if you're doing insurance fraud, you probably don't want to go on The Price is Right.
money, billions in taxpayer dollars. The skyrocketing fraud involving workers' compensation, questionable claims of 24%. Tonight, a contestant on The Price is Right. The problem is, she had told work she was injured. This evening, how she's spinning this now to ABC's Cecilia Vega.
So what on The Price is Right with someone with serious injury not be able to do you think? The final spin, you remember that thing? Does that program still on TV? Jim Carrey on what the they were.
When you hear those three, on The Price is Right. You do what the thing is supposed to do. Like the twin, well, 1,375. But unfortunate, fabulous prizes wasn't the only thing Catchwell was collecting. Was also cashing in $3,000 a month at workers' comp. Claiming an on-the-job shoulder injury left her totally unable to stand, run, reach, or grab.
There's 3 of the 4 right there. She's not running. Well, I think she did run down to the front, didn't she?
But there she is, spinning that big, heavy wheel, not once, but twice. It turns out The Price is Right double dealer isn't the only one. Bogus injury claims cost taxpayers hundreds of millions a year. Scores of former New York City cops and firefighters indicted for falsely claiming they had PTSD and anxiety.
Yeah, so you can just see it's an issue. I remember when USA started doing disability income, not workers' comp. This is a big issue. How do you handle fraud? You have to hire people. You have to hire people, go trail people and those kind of, I mean, it's a very different business and fraud is always there. This is one of those businesses that's just, it's just endemic to the actual business. Kind of sad. These are kind of sad people. You have to wonder how horrible was their job that they're willing to stoop to this. I mean, I'd rather be at work than at home watching TV. That's, you know, I guess she's having a pretty good life going to Price is Right, but so anyway, so fraud is an issue if it's you know, who knows where they're getting these numbers. I never trust numbers like that because they have an incentive to inflate them, and these are numbers that you can really inflate pretty easily. You're making estimates, so who really knows how large the issue is, how much it's costing us. They say costing taxpayers. If it's workers' comp, it's costing the businesses. If it's Social Security, and Social Security disability is the most bankrupt part of Social Security. So if you look at in the order, Social Security disability is the worst, then Medicare, then Social Security itself. So Social Security disability is already in the red, already losing money, and it's a huge amount to the taxpayer. If there's fraud in there, then yeah, definitely that's costing the taxpayers. Uh, what about the employer? So an employer, so workers' comp, disability, these are places where this premium is directly related to the payroll. So you have to send them your payroll. And if you underreport your payroll, your premium will be lower. So that would be fraud from the employer standpoint. I can't remember if I told y'all this, the strangest, I was doing this for life insurance where we paid a certain percentage of salary. If some of y'all have heard this story before, but I needed to get that number. And so someone sent me the file. I go, thanks, and I open it up, and it's a list of every USA employee by name with their salary, sorted by highest salary to lowest. So the first name was the CEO. I clicked off of that so fast, and I didn't see the number. Y'all don't believe me, but I did not see the number. I just didn't even look. But so I emailed the person and said, why would you send a file like that through email to someone? And they hardly even knew me. It was like I could have sent it to the whole company. Do you know how much our CEO makes? It was just ridiculous. So they do have to do, they don't necessarily have to send it by worker, but they probably have to send it by type of worker. And so yeah, it's sensitive information, but if the employer just intentionally under reports that, then yeah, it's gonna have a direct impact on their premium. Inflating experience. So anything you do to make your workers seem less risky than really are, that's an issue for the insurance company. I'm not sure either of these is a crime, but it is something that the insurance company does have the right to go back and adjust their premiums after the fact. It's kind of like the same thing, you know, if you tell your insurer you're buying life insurance, you tell them, no, I don't smoke. And then the person dies of lung cancer, they can easily go investigate that. If they discover, yeah, the person's a chain smoker, what happens? Well, in that case, what they'll do is they'll say, okay, you had a $300,000 policy, but if we'd known you're a smoker, that premium would have only gotten you $180,000. So we're going to give you $180,000. So, you know, you're still insured, but you should have told us, you know, the truth. So those aren't necessarily going to get you into jail, but the insurance company does have the right to go back and fix things. And then just the employer doesn't get workers' comp when they're supposed to. And then, you know, it's not that hard to go find that sign that you can put up in the common areas that say, hey, you're covered workers' comp, and have your workers thinking that they're covered when they're really not covered. All right, so fraud, you know, you probably could do a whole paper on fraud, but I'm not sure what all you would do with it. They kind of get redundant after a while. Claims administration, this is what I was talking about, is the outsourcing function. So USAA with 40,000 employees still use their workers' comp company to do a lot of the work. How much do you outsource? It probably depends on how large you are. The issue is, if you turn over to a third party, the employee that's injured doesn't feel like they're dealing with the employer. And so they may not have that connection to come back to work. So you want to make sure you maintain that. You do have to move quickly. Once people get used to a certain thing, I've noticed this with COVID. A lot more students are not coming to class than before. I don't know what percentage of your classes are entirely online. It seems like we're moving to 100%. We're going to be University of Phoenix here in a couple of years. A lot of that's the professors are driving it. How many classes y'all have that are all online? 2. How many are in person? So it's what, 20, 80, 30, 70% kind of thing. Why are the ones online that are online? They say this class is online because, and what do they say? It just is. I've seen some like stats classes where the only choice is online, and I don't know why that is. Yeah, I don't know. So UTSA doesn't have I guess I should know more than y'all, but UTSA doesn't have a reason. I know with John Tui, his class is online, but he requested it because of a work related issue. So they somewhat accommodated him. So I don't want to be University of Phoenix. At that point, I'll quit. You know, I don't need, you know, I'm retired, so I don't really need it. But yeah, it's kind of sad. But yeah, COVID changed a lot of stuff. People just got so used to not, and I understand it, driving to school, and the worst thing is parking. Universities make it really, really bad. I don't know if parking's easier now because there's so many online classes, but yeah, so parking, so I get that part of it. That the university should fix if you're gonna charge you that much money and build more parking garages.
You like the books too, not gonna just buy the online program, I don't have to buy the physical book.
Yeah. Yeah, but your online books are still 10, 20 times more expensive than the books. My semester at UT Austin, I never spent over $100 in books in total for 5, 6 classes.
I do about the same.
But yeah, but no, I mean, for me, yeah, the inflation on college books, it doesn't make, I don't know why anybody would spend $300 on a book in any context outside of college. And I don't think there is a college book that's worth $300 because I've read some of them. They're pretty poorly written, some of them. So you got to get the employee back pretty quickly or they're just going to get comfortable. If done internally, you may have to have an actuary. So USA has a bunch of actuaries, but USA actually has probably 4 actuaries that are in the employee relations. They're not doing insurance. They're doing pensions, they're doing health. They had a pension actuary, they had a health actuary, they had executive comp actuary, so they had at least 3. And 2 of them I got help get hired there because they both worked with my little brother and they applied. So I got 2 of them in there at USA. So 3 actuaries, and that's USA. You think USA is going to hire actuaries, but firms like GM and others may hire an actuary to handle this type of work. It just depends. You know, if you don't do it with your own actuary, you're going to have to pay those resources to another company because you have to set up a liability in your accounting books for these disability claims, workers' comp claims. It's the same as for the insurance company. You have the incurred but not reported. You have all the same type of claims. So if there are people with carpal tunnel, they haven't reported it yet, you've got to put it into your reserve. So you have to have actuaries to do that, or you have to outsource it. But the goal is to get the employee back as soon as possible, back on the job. So what's changed, and I've seen more and more articles on this. This is a special issue for the United States. Most other countries are already there, and the reason it's an issue for the United States is because it's the state versus the federal government. Most employee benefits are federal government, workers' comp is state. This is kind of my biggest thing is employees don't really care who's going to pay the bills. They just want them paid. And yet the structure we have, it's where you're working on a job, where you're in a car accident, what happened, you know, all these kind of questions that come up because you got to figure out which bucket to take the money out of. And the employee's just like, just pay it, just pay it. So there's an attempt has been made to see how much can we make it look like it's all one big system, even though we know it's not. And that's this idea of 24-hour coverage, is that you just want disability, you just want health care, you don't care. And for most of you, when you get your job, that's probably what it's going to feel like. You may not know if you're on workers' comp or on disability. You're just going to be covered. You're going to be paid for not being at work. So that's essentially what the employers are trying to do. But behind the scenes, there's still a lot because every one of these have a separate contract and a different company. So behind the scenes, there's stuff going on here. But the goal is to merge workers' comp with other employee benefit programs so that one is covered no matter what. It's much more pronounced internationally when all this stuff is pretty much this regulated by the same body anyway. But it's tough. It's very tough to get ERISA and state regulators to coordinate. Now, if you went onto the NAIC site, if you typed in ERISA or OSHA, stuff would probably come up. That's probably an issue that they study at the state level to try to figure out how do we coordinate what we're doing with the federal government. But ERISA, I don't remember what it stands for, and Employee Retirement something America, probably. It's under the Department of Labor, the Employment Retirement Income Security Act. So it's an actual law. So that's ERISA. So ERISA, your pension plan, your 401k plan, not your health insurance, because your health insurance is a state regulated business. But it does have rules related to health insurance. So I mean, there's some overlap that state regulate the companies, but ERISA sets the rules for what the employer has to provide. So there you have ERISA, then you have OSHA, which talks about workplace safety. You got to handle all of these things, and if they're not well coordinated, yeah, it can be a real pain. So the insurance industry itself is trying to find ways to work with employers so it's not so complicated. You don't have so many people telling you how to run your business. The next thing, since you're trying to get workers back to work, what kind of programs do you have to encourage workers to come back? Especially lower paid workers, you know, working retail. I worked at McDonald's for a month and Chick-fil-A for a week. I would have rather been home watching TV. Those were tough. Any of y'all do fast food? It's just horrible. And clothes, isn't clothes the worst? You just like, "Oh, I just want to go home. This is horrible." So I can somewhat understand it. At USAA, it was I think we talked about this. It was the claims reps. The claims reps took all their sick leave because they're just tough jobs. So you kind of understand it. How are you going to get someone like that to come back and convince them they're better off coming back? So first thing is to make sure you really understand the employee, what they're capable of, that you don't have them come back too early. Maybe find a way to work them into an easier job for a while, maybe part-time for a while. Make sure you match the job really, really well. You may need to provide rehabilitation services. I did rehabilitation when I dislocated my little finger. I wasn't real impressed with it. I thought it was kind of a waste of time and money, and I was paying for it, a lot of it myself. But I don't know if any of y'all done rehabilitation. I think it just depends on the company and the workers that are there. But hopefully they have some expertise in what they're doing. The worker may need to be transferred to another job for a while. These programs require close working with the worker, and if the worker doesn't want to come back, you know, the program's going to definitely fail. Let's see if I'm going to try this again. Largest workers insurers in the US. So Travelers, Hartford, Zurich, Chubb, AmTrust. I'm not familiar with AmTrust. They're not massive numbers, $3.5 billion. So it's not, they aren't 20 billion, $30 billion businesses. You know, look at Travelers, their overall income is much, much higher than that. So it's a small percentage of the business. It's only 2.2 billion of Chubb's. See right here, let me in there. We covered most of those. Oh, this is interesting. Median annual premiums. Construction, as we talked about, the riskiest of all. Real estate, building design. I don't know why architects get injured on the job. Retail. And what would be interesting in retail is what is the most common claim? What is it that is happening to them that they're filing a claim? Is it slip and fall? Is it airborne diseases? What is it going on? But yeah, you would expect the more physical jobs are going to have the higher claims, people that can actually get injured on the job. The largest company's Travelers is 6.8% with 3.5 billion in premiums. $3.5 billion. So it's about 10% of their revenues. So it's a pretty good chunk, but they're one of the largest ones out there. Now, most of y'all are probably thinking Aflac, right? But does Aflac do workers' comp? Do y'all know? Anybody know? So when you think disability income, you always think Aflac, right? You always think, what is it, the duck or whatever? Does Aflac pay workers' compensation? Aflac policy may have a benefits coordination clause whereby the amount is reduced. So Aflac does disability. I don't think they do any workers' comp. In fact, they love workers' comp because it reduces what they have to pay out. So Aflac is probably the largest, I would imagine, the largest disability writer out there. And I may be just saying that because they have the biggest commercials and most irritating commercials. I mean, they're good commercials because you remember them. One thing I don't like about the commercial is I ask a lot of people if they know about Aflac and the duck, and they can do the imitation of the duck, and then say, well, what does Aflac sell? And they have no clue what Aflac sells. So it's a good commercial. It makes you think about the company, but you don't think about the product they're actually selling. But I don't think they do workers' comp. Interesting company. So it doesn't look all that concentrated. That the largest provider is 6.8% of the market. It's, you know, it's just a couple of years ago, so it's not all that concentrated of a market. All right, so there's workers' comp. The Texas Insurance Commission. Texas Department of Insurance, TDI, they do have workers' comp section. I want to report my injury, get help with a claim, find a doctor, make my workplace safer. I want to search, there we go. Why they even have a whole button just for workers' comp. So what would be interesting, well, I don't know if this would be a good paper, kind of boring, but what would be interesting would be to pick maybe Texas, California, and New York and do a side-by-side comparison of their workers' comp. I think that could be intriguing. I don't know, it gives me nightmares because my boss told me, I want you to do a side comparison of all 50 states and their investment laws for insurance companies. Like, you gotta be kidding me. I was like, no, I want you to do this. Oh, thanks a lot. But that would be interesting. I don't know what other state, maybe Florida, you know, the major states, and how different are they? You would think California and New York be much more liberal policies than Texas, but who knows? How much different are they? What do you get in Texas if you lose a limb versus in California? What do you get for death versus, you know, the different states? That would, I think, would be interesting to see in the different professions. All right. Any questions on workers' comp? So let's do a test here. PNC insurance products. So how many can you name? What do you own? Let's start with that. Say it again. Homeowners, all right. What else do y'all own? Auto. Well, we just talked about one. You could throw that one out. Workers' comp. What are they on the personal side?
Love,
Huh?
like,
Well, let's just say on the P&Z. So how can we break up homeowners then? Renters, that's a separate one. There's also fire. So we can talk about that. There are some policies that specifically cover just fire.
Flood,
Yeah, that's a good point. Flood is completely separate, and sometimes earthquake. How many of y'all, I want to ask, but I mean, I'm curious how many of y'all have flood insurance. My guess is no one in this room has flood insurance. I won't even ask how many of y'all have renters insurance. My guess is most college students don't have renters insurance. They're like, take everything I own. I can go borrow $50 and buy it all back. At least that's the way I was. Auto, you have the physical. You have the liability. What else do you have? The ones I love. Medical. Uninsured. So when you buy auto, you're buying 4 products. Just realize that I'm buying 2, you're buying 4, but you're buying 4 products. So just be aware of that. Okay, workers' comp. What else on the personal side? What will you own in about 20 years when you're really wealthy? Or
Health, right?
that's life insurance side. I remember your umbrella policy. So it's liability only. It wraps around your home and auto. You know, how many of these do you have? How many should you have? And then what are your premiums on each one of these? What are you paying? This is probably your cheapest one. Homeowners is pretty cheap insurance. Auto's probably your largest one, but you are paying for things that you could, you know, the physical and liability. Liability you have to have the physical. You know, if it's a 10-year-old car, you probably could just cancel that and say forget about it. So when you get to the more commercial side, general liability, the theft, the marine, inland marine, the boiler, and machine. And then if you want to put title in there, am I leaving any out? And we'll see when we look, we're going to look at Allstate when we get to the accounting side. The statutory blank breaks most of these out. So you can actually see specifically. I mean, you're gonna be amazed when we get this part schedule P. Not only does it break, it's not like each one has their own column. Each one has their own schedule P entire chart. So they get fairly detailed, and there's going to be some more. You know, I should keep this list. There's going to be some more that are going to be like really puny businesses. And you might ask, why are they breaking that out into a separate one? We'll see those when we get to Schedule P. But most of you will have or do have this. I don't know what percentage of you have umbrella. It's got to be pretty small percentage that will have umbrella. All of you will get this through your employer. This you probably won't have unless you're an officer of the company. The second you have vice president or something by your name, you're going to suddenly be aware of this, and they'll let you know. They'll definitely, it's part of your orientation. If you go, I went from executive director to AVP, and that's the first time I heard of it. Executive director, like, we don't care, do whatever you're doing. Once I became an assistant vice president, then suddenly I was covered by this policy. You won't do any of this unless you own your own business. You won't have that. This you can buy yourself, right? When you mail something from the post office, you probably won't have this. You will have this, right? I should probably move this up to the personal lines. It's a lot longer list once you see on the life insurance side. Life insurance is essentially life, annuity, health with, you know, life insurance. Yeah, you have term and perm, but they're essentially, it's all life insurance. So the reason I bring this up is we have a few actuaries in here. Usually each one of these things has, except for title maybe, each one of these has an actuary that specializes just in that one thing. And not only do they specialize it, they specialize on the pricing side, on the underwriting side, on the reserving side. You know, so it's a very specialized field. I've tried so hard. There's a student that was in this class probably 25 years ago who went to UTSA as an actuary, and I keep trying to find him. And I keep hearing rumors that he's still there, and I really want him to come talk to this class, but for some reason, he must have really hated my class because he just won't get back to me. but really smart guy. And he started on the fire side, and that was kind of my thing, is like, what does fire mean? And he was explaining it's special types of structures that can't get the other insurance because they're unique, and we just give them fire and that's all they get. And I thought, well, that's really interesting. It'd be intriguing to hear from him. The outside speaker I used to use, she changed careers, so I can't ask her back anymore, so it's kind of tough. I have thought about having an underwriter come speak to us, but it's just hard to find speakers that are that I can trust will, kind of keep on topic. But anyway, there's so much specialization here. Now, if you're a finance person, you're probably going to work for a company that focuses on the personal side or the commercial side, and you're understanding these like for me at USAA, homeowners was just homeowners. I didn't make a distinction between the difference. We did make a big difference between homeowners and auto because most of our cat came from homeowners. So if you're going to interview with a company, well, I'll show you with Allstate. If you're going to interview with a life insurance or a property casualty company, before you do the interview, you need to know what businesses they sell. But I'll show you how you can get that from their annual report. Now, if you're interviewing with USAA, you can't get that because they don't report that. So you can't actually get your, I might go get my hands on it and show it to you, but a public company, and I'll show you, I'll say most public companies put their annual report out there on the internet. So you have all that detail. If I were you, I'll show you the pages when I do Allstate. I'll show you the pages you should print. So if you go interview with Allstate, I'll show you which pages you want to know to say how much of their business is auto versus home. That's a really big one for Allstate. For Allstate does some commercial, but not much. USA does no commercial whatsoever. State Farm doesn't do any commercial at all. But you want to have that break and understand. Now, I saw some commercials from Progressive that was related to homeowners. I didn't think Progressive was doing homeowners, and I still wonder if they're doing homeowners, that they may just have a relationship with another insurance company that they're selling their policies, because I didn't think Progressive did homeowners. But you definitely want to understand that when you go interview for the company. So, but it's easy. Insurance is pretty easy because the data's out, especially if it's a public company, the data's out there. And you can just in a piece of paper write it down exactly what you're doing. All right. So where we're going to go next is bring your calculators, because we're going to start doing some math, calculating premiums. If you took my life insurance class, it was a lot easier in that class. It's a big mess on the P&C side. The reason it's a mess is life actuaries do present value very much like finance majors do. Property and casualty actuaries, they don't. And so I have this thing, do I teach it like a finance person or I teach it like an actuary? I'm going to teach it from a finance standpoint, and then I'll warn the actuaries it's not going to look like this on the exam. So unfortunately, because the math is a little too advanced. So, all right, we'll start here next time.